that you make in your home country is called an onshore investment. Okay? Any investment that you make outside of your country is called an offshore investment. So this can be as simple as buying land in a different country to very complex financial transactions, such as investing in money markets, bonds, and in different countries that are not based locally. Okay, so some people use the term off-border investments or in-border investments, but offshore investments serve the purpose. Now, there are certain key terms that are associated with offshore investments, one of them being an offshore financial center. Yes?
Sorry, are you presenting anything? Because you've not shared your screen. Just to
I have tried to share my screen, lakini it's saying only the host can share. Yeah. Okay. You have to edit that for me.
Sure. Let's.
Yeah.
Kindly try sharing your screen again.
Is it okay?
Yes, kindly share.
Let me try again. Okay. So is that okay?
Yes.
It's sharing now, huh?
Yes.
Okay. So back to our presentation. Like we said, any offshore investment that you make, any investment that you make outside of your country of residence is referred to as an offshore investment. Any investment that you make within your own country, within your own borders, that's called an onshore investment. So this can be as simple as buying land or opening a shop, let's say in Tanzania, to very complex transactions in, let's say, investing in money markets, in bonds, and investing in different companies that are not based within your home country. Okay, so there are certain key terms that you're going to be using very often and that you're going to meet as you do your own research, one of them being an offshore financial center. This is a country that has very low taxes and which serves a lot of non-residents. Okay, you could be a citizen of a country or you could be a resident of a country, but you're not a citizen of that country. So if you're making an investment in a country that you're not a citizen in, that is still regarded as an offshore investment. Okay, and a tax haven is a place with very low effective rates of taxation to different investors. Most countries lower the tax rates for companies, for individuals, to attract new investments, to attract new businesses, to attract new money to flow in. Okay, this is tailor-made specifically for the investors and for the businesses. Now, a tax haven can even be a place within a country. You could have a specific region within a country that is segregated, if I can use that term, with specific low taxation rates. And you are told if you invest in this region, you're going to give you very low taxes. That can also be referred to as a tax haven. Okay. Now, some of the reasons why offshore investments exist. Number one is the obvious one, tax advantages. The tax in your country could be very high and could not be favorable to investments. Okay, so some people opt to invest in different countries to take advantage of tax benefits. Okay, number two is the investment diversification. If you have a if you have a large portfolio and you're looking to add different things to that portfolio, then investing offshore could be a very good option. The next one is avoidance of inheritance or forced heirship. Now, there are some countries with very high inheritance tax. I don't think if that is present in Kenya, but some countries like the USA, when you are inheriting something, you have to pay a lot of taxes before you can actually receive the inheritance. So investing in an offshore market avoids all of these taxes. Number three, the next one is lower level of regulation, which is very obvious. Some countries are very heavily regulated, which makes it very impossible or very expensive to do business. The next one is privacy and confidential financial information. A lot of people invest offshore because of the privacy involved. A country like Switzerland has very high levels of privacy and a very confidential financial system. So you cannot really know who owns which bank account where and how, unless you're the owner of the account or unless you're part of the bank itself. So privacy, confidentiality is a very key when investing offshore. The next one is specialist financial services. There could be certain financial services that you're looking for within your own country that may not be available. So you might look to a different country that will offer such services. The next one is safeguarding against currency devaluation. Our own example here locally, we are going into an election year. So obviously that will mean a very volatile Kenyan shilling. So what someone can do, they can invest offshore to safeguard against the Kenyan shilling dropping in value. So currency devaluation is one main reason why people go offshore. Okay, so are we clear on that?
Yes, unless anyone from the team has a question.
Okay. Now, who is offshore investing for? The term offshore itself might seem like a very fancy, complicated term, but generally, anyone looking to diversify their investments, any business, any company, any entrepreneur, any startup, even just a family looking to expand their wealth can invest offshore. It really doesn't have a specific class of people. It doesn't have a specific group of people. It depends on you, what your goals are, what you're doing, and the world has become a global village. So it's very easy for anyone having the heart and the money to do so to invest. Now, we have popular offshore destinations. I'm sure you have seen some of these destinations in movies and in programs here and there being mentioned. Switzerland in Europe, Cyprus. We have the Cayman Islands. In Africa, we have Mauritius, we have Seychelles. Now, these destinations are popular because, number one, their privacy levels. Number two, their taxation rates are very low. And number three, the governments in these economies are really making an effort to attract foreign investors. So they're offering very, very lucrative incentives to invest in their countries. This list is not exhaustive. There are countries like Dubai, the United Arab Emirates, that should also be on the list. There are other islands like Singapore and Hong Kong, which should also be on the list. So there are several different destinations, each offering several different avenues, several different products for someone to invest in. Okay. Now, how should you go about investing in offshore investments? Some of the vehicles to use in investing offshore. Number one, investing in financial markets. The financial markets generally is a place where different financial instruments are traded. We are talking about currencies, we are talking about bonds, we are talking about shares, we are talking about derivatives, options, forwards. Every financial instrument that you can think of falls into the financial markets. There are some financial instruments that are not available locally here in Kenya, and someone might wish to invest in them. This can take the form of investing in a hedge fund. A hedge fund is an organization that employs different strategies to take advantage of how the financial markets move to maximize the returns for their investors. Okay, this could also A mild form of this could be trading for yourself. For example, in the case of Forex trading, that could also be investing in financial markets. Because when you're trading, you're not using the Kenyan shilling, you're using the dollar. So your exposure is in foreign currency, okay? Next one will be chartering or forming an offshore corporation. This could take the form of, there are companies in the UK and in different offshore destinations that are specifically operating for the purpose of forming companies for others, okay? That's why it's called chartering or forming an offshore corporation. You could hire these companies to create a company for you so that you can be able to transfer your money to that company and start doing investments in that country, okay? Physically taking your money offshore, this involves opening a bank account in a different country or a brokerage account with a stockbroker in a different country and being the one to handle all your transactions through that bank account. Different countries have different requirements for foreigners when they want to open a bank account and when foreigners want to open a brokerage account as well. So it's always good to understand which country, how each country operates and what are the laws in each country and how one can be able to do this, okay? Investing in businesses in a different country, this is very simple and straightforward. Identifying business opportunities. It could be a store, it could be a hotel, it could be a shop, it could be an online business that is based in a different country. This is also a form of offshore investing because you're investing in a different currency and in a different country that you're not a resident in. So this is actually a very popular, it's actually a very popular form of offshore investing, especially for venture capitalists and other high-level investors as well. Investing in Kenya shilling denominated investment options. There are funds here in Kenya available locally to whom you give your funds, you give your money, and they promise you a certain rate of return every year. So what they do, they take your money, they convert it to a currency, let's say the US dollar, and they start investing it in different instruments and in different areas, okay? The difference between investing in this and investing in financial markets is that in this you're investing in Kenya shillings, but the exposure is foreign, meaning your Kenya shillings are converted to the other currency and the firm is the one responsible to pay you the returns. The one for investing in financial markets, you are the one responsible for managing your returns and managing your risk and your exposure. So these are just some of the basic ways. Of course, the list is not exhaustive. There are so many other ways someone can come up with, especially with the advent of the internet, making things and businesses very easy. It's actually very easy to start a company in the UK right from your home, okay? Provided you have the necessary paperwork, the necessary cash, it's actually very easy to get started, okay? So any comments up to there? Hello, everyone.
No, we'll address this. There's some of the questions, but we'll address them at the end of the session.
Okay, so. Now, every business, every investment has its own risks. Every investment has its own downside, which every right-minded investor has to consider before investing, especially when you're investing in a foreign country. This is a place that you're not born in, you're not a citizen in this country. So there are certain things you have to look out for. And there are certain things you have to take into consideration before you put your money there, okay? The same way there's a risk if you're in Nairobi and investing in Mombasa, there are also certain risks that you have to look at. The difference here is that this one is more global and it can hit very hard if not managed properly. Now, one of the main risks I want to highlight here is political risk. The country you are investing in should be stable, okay? The government should have sound economic policies. There should be a very, very stable political system for money to flow. We all know how politics can affect the economy in a very drastic way. We all know how things can shift in an instant. Our 2007 post-election violence is an example. I also have a friend who invested in South Sudan, and he invested in dollars. And the war broke out. His assets were okay, they were untouched, but the value of his currency was absolutely zero at that time. So political risk is a very, very key factor to look at. Another thing is the credit risk. Credit risk involves looking at the company that you're investing in. Okay, how is their balance sheet? How is their income statement? What are the recent trends in that industry? How has a company adapted to different economic changes here and there? Does this company have the liquidity available? Does it have the government support? So many things to look at the credit risk as well. Credit risk can also be brought down to your own personal level. Will investing offshore improve or lower my credit? How will it affect me on a day-to-day? So that's also something very important to pay attention to. Another thing is inflation risk. Okay, when inflation increases, the cost of goods and services also increase. Okay, so the currency decreases because investors will not be able to purchase much with the currency they previously had. So looking at the inflation of the country that you're investing in and the inflation of your own local country as well is very important to safeguard your money and the value of your investments. Then we have exchange rate risk. You could be investing in dollars. Something happens in the US, the dollar value goes low. That could also affect your bottom line. And then we have legal risks. Legal risks are risks that every country has its own laws. It has its own system. Just because it's offshore doesn't mean they're going to be flexible with their laws or they're going to make exceptions. So it's always important to be in compliance with whatever laws and rules and regulations that every country has, whether you're doing it individually, whether you're doing it through a company. If you're doing it through a company, it's important to ask questions to the directors if they're in compliance with the countries they're investing in and how they're doing it. So legal risk is very, very important. You can have a lot of court cases being held up, a lot of investments, being held up because of legal issues here and there. So that could tie up your money. So it's something to consider before going into it. Another risk that is very important is liquidity risk. Liquidity refers to the ability of a good or service. How fast can this asset that I'm investing in be converted into cash? Okay, if anything were to happen, how fast can I convert it into cash? Okay. Number two, how long will it take to acquire an asset? Okay, and how uncertain is the price to be paid as well? So whatever you are investing in, factoring in liquidity, assuming you want out, how fast will I be able to get my money back? Will it be like, for example, property that can take months to sell, or a stock that you can easily convert into cash very fast? So that's also something to look at. Another thing on liquidity risk is you have to understand how the general market of that particular country operates. There are some countries that have a minimum time requirement for you to hold an asset before you can sell it. Okay, you might want to buy an asset today and sell it next month, but the laws in that country might prohibit it. So that's also something to factor in. So risk is something that is always present. Whether you're investing here locally or you're investing abroad, it's something that is always there. Even if you're just operating a kiosk in your neighborhood, it's something to look at and it's something to factor in, especially when you're going outside of your country. Okay. So here you can see a general structure of how, I don't know if it's clear, but of how a company, might set up its offshore operations. Okay, you have the owner setting up a trust in Cyprus, okay, then opening an offshore holding company in Seychelles. Then that offshore holding company is doing property investments with a different offshore bank account. All of this in a bid to take advantage of tax regulations, in a bid to take advantage of so many other incentives that the governments of these different countries offer. This is on the higher scale, on a very large corporate scale. Now, before you start investing, what questions should you ask? What should you look at? And what ideas should you be comfortable with regarding the investment that you want to take? This is a checklist before you go offshore, okay? Low tax jurisdiction. The country you're investing in there should be a significant difference between your local tax, the Kenyan tax, and the country that you're going to invest in, okay? So you should be clear on the tax, number one. Number two, you should be clear on the specific tax to whatever instrument that you're going to invest in. If you're investing in stocks, if you're investing in bonds, if you're investing in a business, all these different instruments have different taxation systems, regardless of whether it's offshore or local. The key thing is there should be a significant difference between what you'd be paying in tax here and what you're going to pay in tax abroad, okay? Favorable incorporation laws. There are some countries that by the time you incorporate a company, you have gone through a lot of hoops and it's quite expensive. So incorporating a company in the country you're going to invest in should be easy, should be favorable, and it should be attractive to foreign investors, especially to the directors of the company. Okay? Stable currency. Which currency are you going to invest in? How stable is that currency? How has that currency performed over the last 2 or 3 years? How has the political situation affected that currency? That is something also to be able to get comfortable with before you make any offshore investment. Privacy laws. Privacy and confidentiality, especially in the financial sector, is a key thing as to why people go offshore. The country you're investing in, how are their privacy laws? Do they protect foreign investors in terms of privacy, or do the locals get more priority? Okay, that should also be a very important question to ask. A stable government, but not only a stable government, but a stable government with sound economic policies. A stable government ensures continuity of business and growth of the economy. So that safeguards your investment for the long term. Investments are made not for today and tomorrow, but mostly for the long term, 1, 2, 3, 4, 5 years from now. And the stable government is what will determine that long-term profitability. You might have all the other aspects in check, but if the government itself is not stable, it's not sustainable, and the economic policies are not up to par, then the investment might not be as attractive. We have a secure banking system. Okay, the banking system that you're looking at should be liquid with adequate capital reserves and little debt. Okay, ideally backed by a good government, as we have discussed. A favorable communication system is also important. Okay, the communication system should allow for stable and secure source of communication that also guarantee privacy and confidentiality. There are some countries whose communication, especially in the financial sector, has to go through a regulator. Okay, that might be a red flag for the country that you're considering. So having good communication system is very important. Reputation, the reputation of the country should be in good standing. Okay? And the time zone and compatibility of the country should also be something to check in. If you're investing in a business abroad or in an offshore location, how are their time zones? Will they be awake when I'm asleep? For example, in Australia, when it's 1 a.m. in Kenya, Australia, it's 9 a.m. By the time you're waking up, the Australians have done business and have slept. So this is also something to look at so that you can be able to adjust yourself mentally for the difference in time zones as well. So I think that just gives a basic understanding of what offshore investments are. And as with anything else, as with any other investment as well, it would be up to you now to find out more information and to ask different questions, whatever you want to invest in here and there. And another thing I would also like to mention before we open it up to question and answers is that you might not hear this being talked about a lot, but I am of the opinion that every investment is neutral. Okay, there really isn't a good investment or a bad investment. There really isn't a profitable investment or an investment for loss. The thing that determines the effect and the profitability or the losses is your attitude and your perspectives towards that business. Make sure that you are investing for the right reasons and especially with the right attitude, okay? That will tune your mind to being able to take full advantage of whatever opportunities are available, and it will help you when things are not also going your way. You could invest here locally and get profitable. You could invest abroad and get profitable. And at the same time, there shouldn't be a difference as well. Okay, so it depends on you, your perspectives, your energy, and your attitude towards whatever investment you're taking, whether you're investing in shoes, or you're selling eggs, or you're investing in the stock market in New York. It all depends on you. So I think with that, any questions would be welcome right now.
Thank you, Penny. I think now, for those who did not know what offshore investment is, have an idea of what it is, and you could actually even have a conversation with someone. So I'll just dive into the questions. I'll group them into two categories if they are like. So the first question we had was, just a second. What platforms can one use to trade in offshore investments? And then additionally, there was also, that was from Rose, there was also a question on markets. Assuming I want to invest in other financial instruments like money markets in the offshore market, how would I go about it?
The first question was?
What platforms can you use to trade in offshore investments?
Now that falls into what we had discussed, the different vehicles for investing in offshore markets. You could invest in the financial markets. You could charter a company and create a corporation. You could invest in a business in a different country. You could invest in local funds here in Kenya that will invest your funds offshore without you having to go through all the hassles of doing the investing yourself. So it's a wide variety. There isn't really a specific channel one might use. You could even go to a different country yourself and do your own survey and see what exactly works here, what doesn't work. So it's quite wide. It's quite wide. The next one was, I hope I've answered that question.
I think what they were really asking about is assuming I would want to trade in stocks. Are there like platforms available here locally? Like just give an example of will I go to my bank, open a CDS account, or who do I go to if I wanted to do to trade in stocks that are not available? I mean, offshore.
Yes. Now that can happen in several ways. Now, the first way would be to open a trading account. Okay. You could, when you're opening a CDS account, this is for the Kenyan stock market. Okay. These are the laws for the Kenyan market. When you're investing in the stock market in different countries, you could invest it through a broker. Okay. And to invest through a broker, you need a trading account. Okay. And to have a trading account, you need to be able to know exactly how to trade that account. Okay. So the first way would be to have a trading account. You could there are several brokers here locally that will give you access to the New York Stock Exchange, the stocks available there. Okay. So you could open an account with them, and part of the instrument that they would be offering for trading would be some of the stocks offered on the New York Stock Exchange, or even the Japanese stock exchange, and several other different stock exchanges available. Okay. Now, this trading account and this broker will also give you access to different commodities being traded, like oil, okay, like gold, like silver. Okay. We even have commodities such as sugar being traded on the world market. We have commodities such as coffee being traded on the world market. So the first step would be to identify a good broker, okay, open an account with them, and make sure they have the instruments that you want to trade in. Does that answer the question?
Yeah, maybe you could just give an example of those brokers that are available.
One broker here locally is we have EGM markets, we have VFM financial markets, we have scope markets, we have Pepperstone. It is available here locally. But you also have to understand that you are not limited to the local brokers that we have here. There are so many other good brokers you can find online which can give you access to these stock exchanges. Okay. One of them would be XM. Another one would be the Chicago Futures Exchange. Okay. So these are different brokers available. When you're opening an account with a broker, you're not limited only to the accounts, to the brokers available locally here. You can open an account with a different broker in a different country as well. The key thing is to make sure that the broker is offering the exact instrument that you want to trade in. Do they have gold? I want to trade in gold. I want to trade in oil. I want to invest in the dollar. I want to invest in the in the coffee market. Do they offer all these different instruments? That is number one. Number two, what are the requirements for opening an account with these brokers? Different brokers in different countries have different requirements based on the laws that they're operating under. So it's important to acquaint yourself with these laws before you open an account with them. Number three, these brokers have minimum deposit requirements. Can I be able to meet the minimum deposit requirements for my trading account? Again, different brokers, different deposit requirements. There are some who are as low as $5 and others whose minimum deposit balance is $50,000. So it's up to you to find one that works for you, one that offers the products you want to trade in, and one that will give you the experience you're looking for in terms of investing. Another thing I would like to add on the trading part is that your intent would be, for example, you want to invest in the New York Stock Exchange market. You have looked at shares such as Apple. You have looked at shares such as Microsoft, which are available in those exchanges, and they're not available here locally. Yes, the broker will give you access to those instruments and to that market. However, it will be up to you to learn exactly how to profit from the stock exchange or wherever you want to trade in, okay? The brokers do not offer, most brokers do not offer that service, okay? Most brokers will not take that time to teach, if I may use that word, teach you exactly how to profit from the stock exchange. So it is assumed that you are opening that account, you have that knowledge, and you have learned exactly what you're doing, what you're going to do with your trading account. I hope that's a very exhaustive answer.
Yes, it is. And still on the broker issue, there's a question here on how do you identify a good broker?
Number one is regulation. Different countries offer different regulation systems, okay? And different countries have a main financial body that regulates the brokers. So you have to be able, the broker you're using should be regulated properly in the country they're operating in. Some brokers are regulated in different countries. That is also a very good sign that this is a broker who knows what he's doing and is a broker who will safeguard your investment as well. In Kenya, we have the Capital Markets Authority. We have different boards in the US and in the UK. So regulation is a very, very key thing to look at. Make sure the broker you are opening an account with or you want to deal with is properly regulated, okay? Number one. Number two, the deposit requirements. Now, this is not necessarily identifying a good one, but it's in line with your own financial standard. You have to choose a broker that can meet you at your financial place. I'll say there's a broker that requires a minimum deposit of $5 to others $50,000. So it's always up to you to find that out. Number three, another good sign of a good broker is the support they give you. When you open a trading account, there has to be consistent support from the broker's side. When there are any other issues that will arise here and there, which will be a lot of them in the course of your interaction, the support has to be very, very strong on the broker's side. But the key thing is regulation. If you can go to the websites of the regulators, most of them have listed the brokers that they're regulating and the brokers that are licensed. So make sure your broker is on that list. That's the main one. I hope that's well answered.
Yes, it is. I guess for now, if you're doing your own due diligence, just go like local in Kenya. If you just go to the CMA website, you'll just see which brokers are licensed. So it works also in other countries. The next question is, what are the risks of a Kenyan investing offshore? And we read reports in the media of foreign investment details seized by government or those individuals exposed. How can we mitigate against this?
The risks are what we have discussed. There's political risks. If you're a Kenyan investing in a different country, let's not even go far. Let's go to somewhere like Uganda. If you're a Kenyan investing in Uganda, the political risk there, is a bit high for any investor, be it from Kenya or from any other country. The same with South Sudan. So political risk is the main one to look at. How is the political climate in that country that you're investing in? How is the government doing its business? How does the government favor foreign investors? So there are some countries that favor local investing more than foreign investing. And this might not be clear in the marketing that they do. So it's up to you to be able to ask those questions. So political risk is very important to look at. That is the first one. There are also the other risks that we look at. The other one was the legal risk. Every country has its own laws. So it's up to you to be able to comply with those laws and those rules and those regulations, including the company you're investing in, if you're going to use a different company to invest in. is this company I'm investing in legally compliant with this country? Also in terms of contracts, in terms of termination of investments, licenses. So it's always important to have that in mind. Another thing, and this I think is also very important, is the exchange rate risk. Different currencies fluctuate here and there every day. And there are so many factors that affect the value of a currency. Okay. And the political risk affect the value of a currency, yes, but there are other factors that we might not even see, like natural events. Japan is a country that has earthquakes every other weekend. So that is something that can greatly affect the exchange rate risk. And I think all the other risks we had discussed as well. The next part of the question was?
How can one mitigate against these risks?
No, there was before mitigation, there was a statement there.
Oh, it says that we read reports in the media of foreign investment details seized by government or those individuals. It was just an additional based on the risks that they have seen. So how do you mitigate against that?
Now, when you read that the government has seized foreign assets of an individual, you have to understand that the government cannot go into this foreign country and just seize assets without the permission of that foreign country. So there are laws that operate behind the scenes, government to government, that make this seizing of assets impossible. Otherwise, it's not usually allowed. Okay, and when the government has gone to that extent of seizing someone's asset, then you should know that they have tried all other means of solving whatever issue they had with this individual. They have had different discussions with that particular country. Some discussions can take months or even years for a foreign government to allow assets to be seized. Because you have to understand, when you're seizing assets, you are taking money out of my country. Okay? So these are not cases that happen every day. Okay? So mitigating against this risk will be up to you. Go out there, seek information, ask as many questions as possible. Ask as many questions as possible. It's just like wanting to start, let's say just a simple business. You want to roast maize on the side of the road. Okay? Again, that's a business with its own risk. You go ask other maize sellers what to do, how do you handle the weather, how do you handle traffic, all of that. So it's always up to you. Do your own research, have that right perspective, that right attitude. Get information, get empowered. That's the best way I know how to mitigate risk. I hope that's fair.
Always remember that. Yes, it is. And just to add on to what Lawrence has said, when you're making any investment, there's no stupid question where your money is involved. So ask all the question, which is, what happens to my investment when I pass on? Do I appoint a foreign executor for that?
Now that will be up to you. It is assumed, just like locally here, if you have investments here locally, the same way you're going to handle your local investments will be the same way you handle your foreign investments. Okay? It will be up to you to plan your estate once you go. Okay? Again, different countries have different laws of how inheritance should be handled. So how does the country I'm investing in handle inheritance? We've said that there are some countries with very high inheritance tax, such that if you're supposed to inherit 1,000 shillings, after all the taxes, you end up inheriting 300 shillings. Okay, so it's always up to you to find out what the inheritance laws of that country are and to be able to plan yourself. Consult a local lawyer here locally and consult a lawyer in the country that you're going to invest in, okay? Again, there's a lot of resources and information online. Your own personal initiative will also help you in that area. But there isn't a specific rule or law that says this is how your assets are going to be handled after you die. Because the bottom line is they are your assets, the keyword there being yours. So you have the final say, even after your death. You have the final say of how they're going to be handled. But it's up to you and how you empower yourself with that information. So is that, I hope that's fairly answered as well.
Okay, any? Yes, it is. When you're making any also where you fill in, when you're filling in documentation, so you fill in your next of kin. So those are the first companies will make, and just also have a plan in place in case you die.
Yes,
I will move to the next question, which is, how is the taxation on Forex return? Oh, sorry, yes.
How is the taxation on?
How is the taxation on Forex returns, and do you get double taxed? I mean, I have invested in Kenya and Dubai. Will I get taxed in Dubai, then get taxed in Kenya?
Now, on that, I will have to ask you, what are you investing in Dubai? Okay. In terms of Forex tax, I will also ask you, what exactly are you doing with foreign currency? Are you trading it, or are you buying and holding it in your account? Okay, because you must be doing something very specific with foreign currency. If you're trading foreign currency, that is treated as an income. Okay, and if you're gaining money from it, that is treated as an income, and it's going to be taxed to any other income that you receive. Okay, because it is assumed you're doing it here locally and you're receiving the income here locally. If you're investing in Dubai, you'll have to be more specific with what you're investing in Dubai to give you the foreign currency that that you're talking about. Generally, this will be considered as income that you receive. Okay, you have your own personal income, let's say from your job, and then you also have to declare this other income. Okay, but it will depend on the specifics of whatever you're investing in and on the specifics of whatever is giving you that foreign exchange.
So if I have, assuming I have income tax, or let's go with capital gains, do I get taxed in the country I have invested in, then I get taxed in Kenya, or how do I just get taxed in Dubai, or do I just get taxed in Kenya?
Depending on the country you're investing in. Now, there's something you have to understand. There are international tax agreements between countries. Okay, there are tax agreements that happen behind the scenes, and most citizens, most workers here locally do not know that if you're working somewhere in the US, in some states in the US, your employer in the US is required to notify KRA that this guy is working here. Okay, this is what we are paying him. So you do what you will with this information. Okay, so this is based on the international tax agreements that happen between governments. Okay, we have US citizens here. Okay, some some industries have to notify the US government. We have employed a US citizen. This is what we are paying him. Okay, so you handle it the way you will. So this is what you have to be aware of. This is number one. Number two, not every country has these agreements. Okay, so these agreements happen on a very low level. By low, I mean behind the scenes. They are not publicly announced, although the information is there for anyone with the initiative to get it. So it will be up to you to find out the country I'm investing in, okay? It could be a good popular destination for offshore investments. It could offer very lucrative returns in terms of the investment itself. But does it have any tax agreements with my country? Are they required to notify the Kenyan government of my investment? Okay, that is also something that you should look at. Whether you're going to be double taxed, that will depend on the country you're investing in. Okay. But generally speaking, there are no specifics here. Generally speaking, you'll pay the tax of the offshore country that you're doing your business in, and it is assumed you went there because of some incentives in taxation. And locally here, unless you choose to declare that income, it will not be taxed. But again, this is general. You have to empower yourself with the finer details of taxation agreements between countries. I hope that's well answered.
Yes, so in a nutshell, before you make any of your offshore investments, just do your due diligence. That's in tax matters. You can also speak to a lawyer to assist with that, a tax expert too.
Yes,
Next question.
Both locally and in the country that you're going to invest in, and also seek out information for yourself on a personal level. You'll talk to lawyers, yes. You'll talk to tax experts, yes. But I insist, always seek out information for yourself.
Okay. The next question is, when is the right time to invest in offshore markets? And just additional information is, we're moving towards an election year, during which it happens there's less cash in circulation. Would you, in your opinion, say that now is the time due to the political risks involved? And why would you advise someone to invest? If you are for the opinion that this is the right time to invest, why would you give them that?
Personally, in terms of investments, I honestly, and this is my opinion, I don't want to be quoted as saying other things. This is my opinion. To me, there really isn't a specific right time, in quotes, to invest in. Okay. Now, it is assumed you have done your research, you have been thorough with the analysis of whatever you want to do, you have asked your questions. Okay. Unless you have found a way to invest in the Japanese stock market, okay, and you have said, okay, this is the time to go. Now you do that, a week afterwards, there's a massive tsunami in Japan or a massive earthquake. So somebody else might tell you, well, you should have waited, but no one could really tell that was going to happen, okay? What I would say is this. Look at the risks involved, the political risks. We are going into an election year, yes. Of course, this will have an effect in our politics, okay? But when it comes to the economy itself, people must still work, businesses must still go on, okay? People must still eat. So money will actually continue to circulate, okay? In terms of the foreigners thinking of investing here locally, they might hold off a bit. But for us locals, we know our country, how it is, okay? And how it always goes. So I wouldn't really say that there is a right time. What I would say is this: look at the risks involved, okay? Look at the timings involved, then make a decision. Now, this will be based on your own personality type. There are people who are very risk averse, okay? They are completely risk averse. By this, I mean, there are people who are afraid of risk, and they try as hard as possible to eliminate risk. Even if Kenya was the leader in the African countries in terms of economic growth, they will still not want to invest because of their own personality type and their own risk appetite, okay? And there are others who love risk, okay? They are very embracing of risk. They love it. They love the thrill. They love the challenge. And they're very optimistic when it comes to their investments. So what I'm trying to say is know how you operate yourself on a personal and psychological level. This will determine, again, the outcome of your investments and how you go about it. Generally speaking, consider the risks. If there's going to be an election, look at it and then make a decision for yourself. Okay. Does that make sense?
Yes, it does. I hope we have answered you, Grace. You could just drop there and say if it's fine. There's another question here on what are the safeguards to look out for when depositing your cash with the brokers, local or foreign or online. I think this was addressed earlier on. Just make sure you do your due diligence and then go to the regulators of the country you want to invest your money in. There's always a list. I could just give like locally here, if you want to know the licensed brokers, if you go to the CMA website, there's always a list that shows you who is licensed in the Kenyan government, in the Kenyan jurisdiction. So if you're also doing other countries, you could just go there to their websites and check and do your due diligence. But maybe Lawrence could also add something to that.
Yeah, the safeguards we've discussed. Regulation is very important. Regulation is very important. Is a broker you're trading with regulated? Okay, if he's regulated in more than one jurisdiction, that's even better. Information is free. You can talk to any one of the regulators. They will tell you. Okay, if you can find somebody else who is using the same broker and ask them questions, that would also be nice. But regulation is very, very important. Okay? You have to be able to be clear on that. Go to the Capital Markets Authority, go to their website, look at the licensed brokers, go to the broker themselves. Sometimes interacting directly with the broker can give you a feel of how they do their business. Ask them as many questions as possible. Okay? If you sense they're trying to withhold certain information, that could be a red flag. So another way would be also directly following and interacting one-on-one with the brokers themselves. Okay, but being regulated is very key. And again, it's always up to you, your own personal initiative, to be able to get this information and empower yourself, so that when you make a decision, you will know the decision is based on sufficient information. And it will not be a decision based on hearsay. It will be a decision that you have made based on information that you have gotten, you have verified, and that you are satisfied with. So that's very, very important.
Okay, and finally,
another thing, if I may add, one last thing. Before you open a trading account, there are usually terms and conditions that they give you. Okay, so a lot of times we do not read through these terms and conditions, whether we are opening a Gmail account or whether we are opening a bank account. Most times we ignore these terms and conditions. Now, when it comes to your money, sit with those terms and conditions, read them through, and ask questions where necessary. That will also help you in getting your mind right with your investment.
Okay. Finally, how does the Kenyan government view foreign investments in regards to taxation? If I trade in Forex or shares in the online platform, does taxation by the Kenyan government apply?
Well, if you're trading in Forex, that's treated as an income. If you're going to receive, if you're trading in Forex, you're trading in the Kenyan stock market in general, that's going to be received, it's going to be treated as an income that you receive. And it will be up to you to declare that income. Okay. Now, these brokers also have financial agreements not financial agreements. They have regulatory agreements with the government that the government can be able to walk in and ask for financial information regarding a particular individual. So that's treated as an income, and it will be up to you to declare that income, okay? Because trading is a business like any other. It's the products are currencies. The medium might be online, but it's an income like any other. So it's going to be treated as an income. The first part of the question, how does the Kenyan government view foreign investment? Caroline?
In regards to taxation. Yes. How does the Kenyan government view? Hello?
Yeah, I can hear you.
Hear me? The first question was, how does the Kenyan government view foreign investments in regards to taxation?
Okay, now our government, generally speaking, has been very friendly with foreign investors. That's why you can see a lot of Chinese companies investing here locally. However, if I may say, they have been, their incentives in terms of taxation has not been on the whole economy as a whole, because for a developing country, you cannot give that freedom away completely. You have to protect certain local industries, okay? So in terms of the tourism industry, they have done a lot to try and lure foreign hospitality companies to come here. In terms of construction, they have also done a lot to come and to lure foreign investors to invest here. But in terms of other industries, such as manufacturing, they're still a bit low on that. And I think it's wise because they're trying to protect our manufacturing industry. But generally speaking, our government has tried. It has tried to allow more and more foreign investors to come. You can see a lot of Chinese investors, a lot of Turkish investors, a lot of Japanese investors investing here locally. The whole of Kilimani, all the apartments that you see, almost 60% of them are built by Chinese money. So they have really tried. What we should be asking, the real question we should be asking is, how is the government handling the profits or the income that these foreign companies are making here locally? That's the real question you should be asking. You could have a company coming here locally, making money in Kenya, millions and millions of dollars here locally in Kenya, and then repatriating all of that income back to their homeland. So you see, it doesn't help us much. Okay, so that's the real area that the government should be looking at. In terms of attracting investors, that's okay. But in terms of us as locals benefiting from the investments that these foreigners are making here locally, I think the government has been very lax on that. A lot of companies are coming here, using our labor, using our brains, using our resources, and leaving very little of their profits here locally. Does that make sense? So we have to look at this thing in a two-sided way. Okay? So we've done well to attract, but how are we handling how these profits are being made here? If we are not benefiting from their profits, okay, what's the point of us having them here? Okay, so it has to be a very balanced. It has to be a very balanced equation. There are some countries that you have to leave 30% of your profits in that country, and that is low. So I think such regulations should be passed here locally as well. I hope that's answered.
Yes, maybe Daniel, you could just drop on the chat and tell us if you're satisfied with the response. And I see we are way beyond time, so I'll just keep it very short. There's a question here in terms of personal finance. How much can I risk for investing in offshore investments? I think I'll take this. When it comes to how much you can take, this is very personal because you'll have to look at things like your risk ability and your risk appetite. And I always emphasize on just getting knowledge. I do not advocate in investing in things you do not understand. If you do not understand an investment vehicle, just take time off, learn about it. Then when you feel and ask all the questions you want to ask, when you feel confident, then you can invest. So when it comes to how much you can risk, there's no amount set on stone. This is personal, but maybe to highlight, it's the minimum investment amount, and that's the amount you're willing to risk. And in case of anything, you would not feel the pinch. If also look at if is it stable, or is your principal amount guaranteed? If it's something you're not feeling safe with, I would advise you do not put your money there. So in terms of how much you can risk, it's you to sit down and analyze it. If you can't do that on your own, you can always get a financial advisor to guide you on these investment vehicles and just advise on how much you should put in there and how to go about it.
Another thing I would like to add on that is always risk money that you can afford to lose. Okay, if you're risking your children's school fees, I wouldn't recommend it because you can't afford to lose it, because investments can go either way. If you're risking your rent money or your food money, that's money you cannot afford to lose. So always risk money that you can afford to lose, because that comes with the perspective that this might work out or it might not. If it doesn't, I'll still be okay. If it does, I'll be better off. So that's also something to consider.
I hope we have addressed everyone's questions. If you still have further questions, you could just write to Vasily, and Lawrence could also leave his email with us. Then he will address other questions outside this session. And maybe just as a parting shot for you, Lawrence, you could tell us about the Nairobi School of Forex Exchange, so that also people may know what you do, and if they are interested, how to enroll.
Yes, so Nairobi School of Forex, what we do, we teach people how to trade. Okay, trading is taking advantage of the fluctuations in the forex market, in currencies, and even in the stock market. So we teach students how exactly to go about trading, so that by the time they are opening an account with their broker, they have the knowledge, they have the information, and they have the practice, and they know exactly what they are doing when they trade. So you come, we teach you how to trade, we show you practically, you interact with the brokers one-on-one, you interact with the financial markets one-on-one, you get to experience firsthand what trading is like, and you get to decide whether trading is for me or not based on that. If you decide it's for you, then you have all the power, all the information, and all the tools that you need. So that's basically what you do.
Okay, thank you. If anyone else has any other questions, just feel free to reach out. There's a question here: when do the classes start?
Classes are done online right now, and the classes are based on your individual timings, because we mostly deal with people who are working. So we set specific timings for different people. There isn't a specific group class available right now. It's tailor-made to what the student wants and their timings. It's always up to them and up to us to discuss that timing. Enrollment is open for as long as you're alive.
Okay. Thank you, Lawrence, and for taking your time to take us through offshore investments. Just to give a summary, I guess now we all know what offshore investments are, and before you make the decision to get into any offshore investment, be it even in within East Africa. Just make sure you do your due diligence. You also understand the products and the markets you're getting yourself into. So take your time, because at the end of the day, it is your money and you do not want to lose your hard-earned money. Before anyone even convinces you, let it be your own personal decision. And if you do not understand probably a market, or you do not know what goes on, you can get a lot of information is online, so you could do your research there and also reach out to experts, but don't just listen to just do your own also personal research. And with that, I would like to end this meeting and thank you for attending our training. And we'll also have an additional part 2 on offshore training next month. Hope to see you in the training. Thank you. You may